Welcome to Super Coaching Regulatory Bodies YouTube channel by Testbook. My name is Madhav Sir. I welcome you all in the next session, that is on finance current affairs, where we are going to cover the finance current affairs from 27th to 29th of January 2025. I'm pretty sure this session is going to be really very important for you all and you're going to enjoy this session. But before we start, may I have a reply in the comment section that I'm audible, visible, everything is fine. We are good to go so that we can begin the discussion without any further delay. I guess my voice is okay. Video is fine. So you can download the PDF of this session from the given QR code. You can scan this code in order to download the PDF for your upcoming examination. So this finance current affairs will help you to prepare really very well, not only for RBI Grade B 25 examination, but these finance current affairs are for SEBI Grade A as well as PFRDA, IFSCA, SEBI Grade A or Grade B examination, which are going to be conducted in the near future. So let's begin, guys. Let's start the discussion. So what all things we are going to cover today? I'll start my discussion with the first news, and this first news is related to SEBI. So recently SEBI has unveiled Dharohar. So what is this Dharohar all about? It is basically a digital repository for India's security market. We will be discussing this particular news in detail, and trust me, this is the most appropriate question which will be asked in phase 1 examination of most of the regulatory bodies and the bank exams which are going to be conducted this year. I can assure you that. Moving on to the second news. The second news we are going to discuss about the latest report which has been presented by SBI, that is the investment and external commercial borrowings which are done in the first 9 months of the financial year 2024-25. That will be discussed. Moving ahead, we'll move on to the next news. The next news talks about CBDC, that is central bank digital currency. So Mobikwik has become India's first fintech company to roll out CBDC in partnership with obviously RBI and Yes Bank. So we'll discuss this news. Moving ahead, we'll talk about iSpirit. So iSpirit has launched Priority Sector Lenders Association of India in order to prioritize the priority lending in the country and in order to fulfill the credit gap which are felt or which are witnessed by the priority sector lending sectors. That will be discussed. Moving on to the next point which we are going to discuss today is again related to Yes Bank. So recently Yes Bank has launched frictionless finance accelerator program in partnership with fifth and the latest subsidiary of RBI, that is RBIH, as well as there is an institute involved which we will be discussing. So all set, guys. All these news are, I think, important enough which will be asked in your examination. I'm expecting that you're going to enjoy this discussion. But before we start, just give me yes sir in the comment section. Here we go with the first news of the day. If I talk about the first news, before we answer the first news, the question is, which institution has launched Dharohar, milestone in the Indian securities market, an extensive digital knowledge library as a part of 76th Republic Day celebration? So which institute has launched this Dharohar? So Dharohar has been launched by which of the institute? Then my answer to this particular question is going to be SEBI. But don't worry, we'll discuss this news in much detail. But before that, remember one thing very carefully, guys. Whenever we discuss these questions are really very important. Why these questions are important? Because in these questions I try to add extra information as well. So Dharohar was launched by SEBI. In, or I would say, at what occasion? So the occasion which is going to be referred over here is, that is 76th Republic Day. So that could also be a question which can be asked. Then there could be a question related to the nitty-gritties of Dharohar which we will be discussing in this session itself. I hope everything is fine. Guys. Just give me a second. Okay, here we go with the first news discussion. So if I talk about the first news, this is going to be really very important. The question says SEBI has recently launched Dharohar. Now the question is what actually the Dharohar is. So SEBI recently unveiled Dharohar, which is milestones in the Indian security market. So in the past, n number of milestones have been witnessed in the Indian security market. So all these milestones of the past has been collected and presented in a single format, and that format is basically termed as Dharohar. So it is basically what? So it is basically a digital knowledge repository which has been developed by SEBI. So SEBI has always witnessed, or we have always seen the SEBI's commitment in order to ensure safe and regulated financial market of the country. So in order to maintain the same legacy as well as to present the same initiatives which have been taken in the past, this initiative has been taken. So this Dharohar is not designed only for the individuals who are involved in the market. It is not for them who are working in the market. It is not for them who are trading in the market. Rather, it is for broad audience, which includes students, investors, researchers, journalists, market participants, as well as the general public. So this Dharohar document, it has 150-year-old history and the way Indian share market, Indian financial market has evolved over the period of time. So it will provide you a three-dimensional view where you will enjoy the 3D galleries, where you can understand, where you can interpret how actually the Indian stock market, Indian financial market has evolved over the last 150 years, which has been introduced. It will include around 3,000 assets which are going to be presented in this particular, I would say, engaging platform. And not only this, it will not only include the past, but SEBI has also come up with the commitment that SEBI will be updating the content on regular basis. So it has been introduced with 150 long history data into it, but it will be updated on regular basis. That means in near future, after 50 years, it will have the entire history of last 200 years, how the Indian financial market, share market, capital market has evolved over the period of time. If you ask me as a student, is it important for you? Whenever you get time, you just go and visit this particular website and check out what all insights have been given in Dharohar, because it will give you a better understanding related to the SEBI operations, SEBI compliances, SEBI's rules and regulations, which undoubtedly give you a better prospect for your SEBI Grade A examination. So clear? So the first question is, which organization, which institute has launched Dharohar on the 76th Republic Day celebration? So the answer to this particular question is SEBI. Moving on to the second news of the day. The second news talks about what? Let's have a question for it. Second news says, recent reports which are given by State Bank of India, the total investment announcement for the 9 months of the financial year 2024-25 stood at 32 lakh crore rupees. And it is what percent? It is what percent high in comparison to the same period in the last financial year. So recently SBI, that is State Bank of India, has come up with a report. In that particular report, State Bank of India has discussed the investment done in the country in last 9 months, or I would say in the first 9 months of the financial year 2024-25. Not only this, this investment has been compared with the previous year investment as well. Along with that, data has been given related to the external commercial borrowings. Along with data related to the external commercial borrowings, company asset value has also highlighted that how the company's or the corporate world asset value has increased over the period of time, which we will be discussing in this particular news. So you need to stay tight, because this is going to be a much detailed discussion on this particular report, and it has a great, I would say, expectations and opportunity that this can be asked in the examination for the coming year itself. In the coming year itself, you can witness the question on the same. Chalo, let's move to the news now. So recently, SBI, State Bank of India, has come up with a report, and this report is related to India's investment as well as external commercial borrowing insights. So I'll start with the first point, that is investment announcements. If I talk about the investment announcements, India has witnessed a rapid growth in the investment done not only by the government but also by the private sector, and obviously the contribution of the private sector investment is much higher in comparison to the government investment. Remember that in the first 9 months of the financial year 2024-25, we have witnessed the announcement of 32 lakh crore rupees of investment, which was 23 lakh crore rupees in the previous financial year, and it has increased by what percent? Sir, it has increased by 39%. It has increased by 39%. If I talk about the private sector, accounted for nearly, so private sector investment accounted for nearly 56% of the investment in the previous year 2023-24, but this time private sector investment is 70%. It is 70% of 9 months of the financial year 2024-25. I don't know how many of you have gone through with the budget of 2024-25, but in the budget presented by the government for the current financial year on 1st of February 2024, and then it was revised after the election again. In that, it was very clearly mentioned that government is trying their level best to increase the private investment, because private investment is now going to be the channel, it's going to be the rider of growth for India, and this initiative is giving results as per the latest data, because out of the total investment, 70% of the investment is alone done by 70% of the investment is done by the private investors. Private investors means you and me, companies, entities which are owned, which are managed by private individuals, by private institutions rather than government involvement. Moving on to the next point, this is the entire data. There's no need to memorize it. I've just given this data for your reference. What is important? So the targets are only important, or I would say the areas are only important. Last financial year, government contribution was 43% in the first 9 months, but this time this is 56%. This time it is government involvement was, or investment was 43%, which reduced to 30%, but for private it was 56%, and now it has increased to 70%. This comparison is the only thing which you need to remember. This is the only thing which you need to remember from this particular table. Moving on to the second part of this news. So second part of this news talks about gross block of Indian corporates. Have you ever heard this term, gross block of Indian corporates? This is the beauty of this session, because with the help of this session, you can understand the financial newspapers in a much better manner. Why I'm saying this? Gross block of Indian corporates basically means total value of fixed assets. Total value of fixed assets of the company. Fixed assets include land. It includes your machinery, plants, equipments. They all are included under the category of fixed asset. And if gross block of Indian corporates is increasing, that means investment which is done by the Indian corporates, it is increasing, which is resulting in increase in their tangible asset value. That is very important. It is resulting in increase in their tangible asset value, which is the most important aspect of this particular discussion. So let's first discuss gross block of Indian corporates. It refers to what? So it refers to the total cost, not value in terms of current value. It's not the current value, it is the total cost. That means value at the time of investment. So I'm not talking about the current value, I'm talking about the value at the time of investment. So it is basically the value of total value of companies' fixed asset at the time of investment, which include building, land, machinery, and these are accounted at their original price before considering any depreciation. But if you consider depreciation, then it will become net block, which is equals to gross block minus depreciation of fixed asset. We all know that fixed assets, they are prone to wear and tear, and because of the wear and tear, their value decreases over the period of time. For example, I'm talking about machinery and equipments. Remember that it includes all the fixed assets. In gross block, we do not consider the depreciation. It is very important for the financial analysis that how well the investment has resulted in increase in tangible asset value of the company. And on a balance sheet, you can find the gross block value under the non-current asset. Where it will be found? So it will be included under non-current asset. Current assets are basically those assets which are short term. But if I talk about fixed assets, these are long-term assets. So they will be included under the category of non-current assets in the balance sheet of the company. Going back to the news, as of March 2024, gross block of Indian corporates has reached 106.50 lakh crore rupees compared to 73.94 lakh crore rupees in March 2020. That means if I add on the total fixed assets of all the companies, of all the corporates in the country, that value of their fixed asset is around 106 lakh crore rupees, which was earlier 73 lakh crore rupees in 2020. So this is the data for gross block. Then we have addition in the gross block, which has been done on yearly basis. As you can see, on yearly basis, on an average, 8 lakh crore rupees addition is witnessed. And if I talk about net block, it is after excluding the depreciation. And lastly, we have the capital work which is in progress. So recently, as per the recent data, 13.63 lakh crore rupees of work is in progress, which will add on into the fixed asset value, Is it clear, everyone? So first part was related to investment. That is clear. Now we witness that 70% of the total investment done in the country comes from the private investors. That part is really clear. Second is, if I talk about the gross block value of Indian corporates, sir, it has also increased from 73 lakh crores to 106 lakh crore rupees in last 4 years, from March 2020 to March 2024. Moving on to the third phase of this particular news. The third phase of this particular news talks about household net financial savings. Household means your, mine, our household savings, which is the saving done by the entire house. So household net financial saving in India has improved to what? So it has improved to 5.3% of India's GDP in financial year 2023-24 from 5% in financial year 2022-23. So if I talk about the household savings, or I would say the net financial savings of Indian households, it is now 5.3% of India's GDP, which is a good value, and it has increased in comparison to the previous data, which was 5%. Additionally, savings in the physical asset. This is what? So this is your financial savings. Financial savings means you are saving in the form of FD, bank accounts, or you are purchasing the financial instruments that will be the part of financial savings. But the moment I say physical assets, that means the investment done in physical asset, for example, gold. So additionally, savings in the physical asset increased from 12.9% of GDP to 13.5% of GDP in financial year 2023-24. So this is really very important. You need to understand the differences very clearly, that if I talk about housing net financial savings, it is basically the savings done in the financial sector, in banks, insurance companies, mutual fund companies, and even the investment done in the financial instruments. But if I talk about the physical savings, so this is the saving done in the physical assets. It is the saving done in the physical assets. For example, gold. This is 13.5% of the GDP and this is 5.3% of the GDP, and they both have increased in comparison to the previous year data, which is the best point for consideration today. Got it, guys? Got it? Let's move ahead. Let's move on to the fourth phase. If I move on to the fourth phase of this particular discussion, the fourth phase talks about investment as a percentage of GDP. Right now, we have talked about the value of investment. What was the value of investment we discussed? So the value of investment we discussed was 32 lakh crore. Last year it was 23 lakh crores, but now we are calculating the investment in terms of GDP. So investment as a share of GDP has also improved in the recent years, not only by government but also by the private sector contribution. In financial year, government investment reached to 4.1% of the GDP. that is highest since financial year 2011-12, and private corporate investment has increased to 11.9% of GDP since financial year 2015-16. So these are again two important data which you should remember in order to answer the objective questions as well as to answer the descriptive question, or you can use this data while writing the descriptive answer as well. Moving on to the last phase. If I move on to the last phase, that is the external commercial borrowings. What are external commercial borrowings? So external commercial borrowings are basically the borrowings which are done by the Indian corporates, which are done by the Indian entities, would be a better word, which are done by the Indian entities from the foreign lenders. So that is basically termed as external commercial borrowings. But remember that foreign institutional investment, which is done in the Indian government securities, that won't be included under the category of external commercial borrowings. So external commercial borrowings include what all things? So external commercial borrowings basically include all the borrowings which are done by the Indian entities from the foreign lenders, on the demand of Indian entities. If government is issuing their government securities, and if those government securities are purchased by the foreign investors, those government security investment will not be the part of external commercial borrowing. Remember that is really very important. Why I'm highlighting this point? Because I will be discussing that this major point was ignored by some of the media houses, and they have given a wrong data related to the external commercial borrowings, which was rectified by RBI in the recent times. I will be discussing that as well. Let's pay attention on the screen. So the total outstanding of India's external commercial borrowing is $190 billion. So why I'm giving this data in dollars? Because this is the amount which we have borrowed from the foreign countries, and we have to repay the same amount in the foreign currency itself. So we should be accounting it in the foreign currency units itself. So it is $190.4 billion. Private sector held 63% of the borrowing, and 37% of the borrowing is done by the public sector. It is done by the government companies, government organizations, government corporates. So ECB registration as a percentage of GDP, if I talk about external commercial borrowing as a percentage of GDP, it has declined from 1.9% in financial year 2019-20 to 1.2% in the financial year 2023-24, because it's really pretty. Why it is pretty? Because not only the percentage has increased, but on the other side, the GDP value has also increased. So consequently, the total net value has reduced in comparison to the previous data. Now, why this external commercial borrowing has decreased? We have witnessed post-COVID-19 foreign investment increased drastically in the country, and due to the drastical, or I would say unexpected increase of foreign investment in the nation, it has led down or it has decreased our dependency on external commercial borrowings, and we were able to justify our needs, our requirements with the help of foreign investment. So that is the reason this has been declined. The overall cost means if you're borrowing, you have to pay the interest. The overall cost has also fell by 12 basis point. 12 basis point basically means it is 0.12%. It has fell down by 12 basis point year over year, and now it is 6.6%. So on an average, the borrowing which is done by Indian entities from the foreign lenders, it is borrowed at a rate of interest of 6.6%. It is at the rate of 6.6%. So there is a clarification which I was talking about. Some media sources incorrectly reported that India's external commercial borrowing has reached $273 billion, but RBI justified it. RBI said, no sir, it is $190 billion only. Why there was a difference? The difference is companies they have included, media companies, they have included $72 billion foreign portfolio investment, which is done in the debt instruments, that is the long-term corporate bonds as well as the government securities, which should not be the part of external commercial borrowings as stated by RBI. So in external commercial borrowings, we do not include the foreign investment. If we are using a word foreign investment, we do not include the foreign investment which is done in the debt instrument issued by Indian corporates or Indian government. So our outstanding is $190.4 billion, which was earlier, if I talk about its value, so its value is decreasing, its value is increasing as a context if we compare it to the recent times, but if we compare it with financial year 2020, the percentage of GDP format has been decreasing. Earlier it was 1.9% of GDP. That was the total external commercial borrowings. Now it has reduced to 1.2% in the financial year 2023-24. Now let's go back to the same question and try to answer that question now. So 32.01 lakh crore rupees of investment has been recorded against 23 lakh crore rupees of investment which was witnessed for the same period in the previous financial year. Same period in the previous financial year. But what is the increase? So the increase is 39%. So what value increase has been witnessed? So 39% of increase has been witnessed in comparison to the previous data. Now, if you say that, sir, is it possible there could be a direct question on, write a short note on the SBI report based on investment and external commercial borrowings of the country? That's not possible. I'll not say that's not possible, but yes, chances are pretty low. But the external commercial borrowing related data, the investment related data, the household saving related data is going to help you a lot while writing different descriptive answers. For example, there is a question, what is the impact of globalization and I would say, what is the impact of globalization and development of technology in the country with respect to household savings? If you're talking in that scenario, you will be mentioning n number of saving instruments which are available, n number of investment instruments which are available. But during those discussions, you can include the data that yes, sir, our household net financial saving has increased to 5.3% of the GDP. In comparison to the previous year data. Secondly, if I talk about the physical asset savings which have been done by the Indian households, it has also increased over the period of time. So investment 32 lakhs, 39%, 23 lakhs. Second is 70% contribution by the private investment. Next point is 106 lakh crore for gross block of Indian corporates. Then if I talk about household net financial savings, 5.3% of the GDP. Physical asset saving is 13.5% of the GDP. Overall private corporate investment is 11.9% of the GDP, and 4.1% of GDP is the government investment which has been done. Lastly, I'll conclude my discussion with ECB data. It is $190.4 billion, out of which 63% liability is going to be bared by the private sector, 37% liability is going to be bared by the government. On the other side, as of the total GDP, it is 1.2% of India's GDP, that is external commercial borrowing. So this data is important while answering n number of descriptive questions. But if you say, or if you expect that direct question will be asked on the same, probability is pretty less. Is it clear to this point? Just say yes, sir, in the comment section so that I can move ahead. I hope each and every point which I have discussed is crystal clear, and I'm pretty sure you must be enjoying the discussion because I have taken the data, or I have come up with the content in a very precise manner which will help you to remember that data and answer the questions in the examination. Okay, chalo. Let's move ahead. Moving on to the next news. So if I talk about CBDC, Central Bank Digital Currency, we call it as e-rupee. In order to decrease the flow of cash in the economy, in order to decrease the RBI responsibility and liability and expenditure to print physical currency, RBI come up with CBDC, which is based on blockchain technology as that of cryptocurrency, but in a very refined manner. Because in case of cryptocurrency, we don't have a regulator, but in case of CBDC, we have a regulator, that is RBI. So RBI has introduced CBDC in the past. It's under a pilot project. It has been introduced for the retail transactions. It has been introduced for the wholesale transactions, and many banks are already participating in the CBDC transactions which are happening day in and day out. But now a financial institute, not a bank, a financial institute, or I can say that a payment participant, a payment system provider, it has been the part of CBDC, and Mobikwik has become India's first financial or fintech company to roll out CBDC in partnership with RBI and Yes Bank. How it is possible? So if you remember, in the past you must have used the e-wallet service which was provided by Paytm in a similar manner. Now Mobikwik will provide you with an e-rupee wallet. You can credit the funds in this e-rupee wallet through your bank accounts, and once you have credited the amount through your e-rupee wallet, then you can make the digital payments in e-rupee format. You will be making the digital payment in the e-rupee format. And remember, this is collaborated with UPI as well. That means now you can scan the QR code, but rather than paying the amount directly from your bank account, this time you will be paying the account from your e-rupee wallet, which is provided by Mobikwik, one of the fintech which is operating in the country. Let's discuss more, but in a very precise manner. So Mobikwik System Limited has become the first fintech in India to roll out full-scale CBDC transactions, CBDC services or e-rupee wallet to the public in collaboration with RBI and Yes Bank. Yes Bank will be the sponsor bank, so primary sponsor bank which will provide the issuance of CBDC. So this CBDC will be issued to Mobikwik by Yes Bank, because Yes Bank is acting as a sponsor bank in this particular case. As we had discussed, CBDC is a digital legal tender which is issued and supported by Reserve Bank of India, and this digital currency is equivalent to the sovereign currency, and it can be exchanged to a 1-to-1 ratio, the similar way we are doing for the physical currency. But in order to decrease the dependency on the physical currency and in order to make India more into the digital transactions, this initiative has been taken. Moving on to the next, first point which you need to remember, now e-rupee wallet is accessible to all the Android users. So all the Android users of this application, that is Mobikwik, which will enable seamless peer-to-peer. That means you can transfer funds from one individual to another, as well as you can transfer funds to the merchant. Users can now pay by scanning the UPI QR code using the e-rupee wallet. Existing users of Mobikwik, who have completed the KYC formalities, they can instantly open e-rupee wallet, and the amount in the e-rupee wallet will be credited from your bank account. Last but not the least is very important, the wallet allows maximum transaction of 50,000 rupees per day with per transaction limit of 10,000. It supports the denomination ranging from 0.50 to 500. So it supports the denomination ranging from 0.50 to 500 rupees. If I talk about the history of the same, that is CBDC. So CBDC was launched back in December 2022 as a pilot project for the retail segment with 4 banks: State Bank of India, ICICI, Yes Bank, as well as IDFC First Bank. In April 2024, RBI allowed non-banking entities to offer digital currency transactions through CBDC, and as of now, 15 banks are the members or who are providing the e-rupee wallet, e-rupee facility to their public. While 14 participants, which include both banks and non-banking entities, they are involved in wholesale CBDC pilot. So for retail, we have 15 parties, and for wholesale, we have 14 parties. Remember that in January, CRED, which is Bengaluru-based fintech, it has also launched the beta version. Beta version means you can take it in this manner, that the testing version of e-wallet has been already launched by CRED, and sooner or later we can have a next news that the second fintech to provide e-wallet, e-rupee wallet facility to their customer is none other than CRED, because it was in news. Last, or I would say the second last news, it talks about iSpirit. iSpirit, what is it and what is this Priority Sector Lending Association of India? But before that, we all know that what is priority sector lending. Priority sector lending was introduced in 1972 when RBI was focusing, or I would say the government is focusing on financial inclusion. So the sectors which were earlier ignored by the financial institutes of the country, they were given a title of priority sector lending, and the condition was fixed that every bank, whether it is public sector bank, private bank or foreign bank, will be providing 40% of their adjusted net bank credit for priority sector lending. In priority sector lending, we include agriculture sector, where we include direct, indirect agriculture activities, allied activities. Then we have weaker section. Then we have MSME. MSME include the startups as well as the export related entities. They are also included. Then on the other side, we have education loan, we have home loan, we have social infrastructure loan, we have renewable energy loan or lending are included under the same category. But there is section wise limits as well. Out of 40, 18% goes to agriculture sector, 12% goes to weaker section, 7.5% goes to MSME, and rest is distributed among these all, which comes out to be around 2.5% if I'm not wrong. Please check. 18 plus 10 is 28 plus 2, 30. 30 is 37.5. 40 minus 37.5 is yes, 2.5. If there is a shortfall, if bank has not fulfilled the target related to agriculture sector, shortfall amount will be transferred to RIDF. Shortfall amount will be transferred to RIDF. In case of a new account, that is Urban Infrastructure Development Fund, these shortcomes will be credited into the Urban Infrastructure Development Fund for the development, and in case of MSME shortfall, that will be transferred to SEBI, and SEBI will be managing that fund. I hope you are aware of this particular context. But if I talk about RRBs or small finance bank, it is 75%. If someone asks you about payment bank, sir, it is not defined because payment bank is not allowed to provide loan. If it is not providing loan, how can you define the term that is priority sector lending? Now let's discuss this particular news. What does this news basically says? Indian Software Product Industry Roundtable. Remember, Indian Software Product Industry Roundtable, which is basically a think tank for India's software industry. It has launched Priority Sector Lenders Association of India under Section 8 of Companies Act 1972. Remember that this particular organization is going to be headed by whom? So I have intentionally removed the name of the CEO because this is going to be a homework. You need to give me the answer. Who is the CEO of Priority Sector Lending Association of India? Priority Sector Lenders Association of India. Name the CEO after the session. Google it, check it, and reply in the comment section. What is the aim behind setting up of this association? So this association basically aims to streamline and enhance the availability of loan under the priority sector lending norms, which is a critical financial sector not only for banks but also for the NBFCs. So it is basically a non-profit organization which focus to promote loan for the priority sector lendings or the sectors which are included under priority sector lending by RBI. Founding members include lending institutions like UGRO Capital Limited, India Infoline Finance Limited, and many more. This Priority Sector Lenders Association of India goal is to help these sectors such as agriculture, MSME, affordable housing, so that they can receive the required financial support from the financial sector of the country. RBI guidelines, we have already discussed about the 40% wala target, but on an annual basis, this 40% totals around 64 trillion. It totals around 64 trillion rupees. Trillion means 64 into 10 to the power 12. Just give me yes sir in the comment section. If that is the case, it is around 64 lakh crore rupees. It is around 64 lakh crore rupees. Just say yes sir if I'm going on the right track. MSME sector contributes 29%. This is important. This is the data which you need to remember. What is the contribution of MSME sector in the nation's GDP? So that is 29% and 45.73% in India's export. But still, this sector faces a credit gap of around 103 trillion rupees. It faces a credit gap of around 103 trillion rupees despite of the demand. that is around 138 trillion rupees, only 25% of the formal financing needs are met through the formal sector, and rest of the borrowing is done from the informal sector. And in order to overcome this gap, in order to finish this gap, in order to bridge this gap, this initiative has been taken. This is very important. So Priority Sector Lenders Association of India is also thinking to set up an NBFC, which will be NBFC Priority Sector Lending. So an NBFC which will be dedicated to provide loan only and only to the priority sector. This initiative has been already introduced in this particular discussion. Like we have microfinance institutions which are working as NBFCs, we have housing finance institutions which are working as NBFCs, and similarly a dedicated targeted NBFC will be set up which will be operating only and only to fulfill the needs of the priority sector, which will be termed as priority sector NBFC. So this is a very basic news. Just remember one point: Yes Bank has launched frictionless finance accelerator program on the occasion of National Startup Day, 16th January 2025, in collaboration with Reserve Bank Innovation Hub as well as SP Jain Institute of Management and Research. If you know this much, that will be more than enough for you in order to answer the phase 1 related question. Rest is just for your reference. You can go through with the data. If you have any doubt, you can ask me in the next session. So these were some of the news which you need to cover for the current week related to your finance sector. I'm pretty sure each and every news which we have discussed are crystal clear. You must have enjoyed the discussion. I will be sharing the PDF shortly, and you can download the PDF on my Telegram channel, which is Economics by Madhav Sir. Before I leave, I have a very important information to share with you. Guys, if you're still wondering, if you're still planning to clear your RBI Grade B examination, but the actual guide, or I would say the expert guidance, is still missing in your life, then I would request you to join our RBI Grade B Lakshya batch, which is a foundation batch where we cover each and every topic of phase 1, phase 2 from basics till advanced. We provide you with the mock test. We provide you with the phase 2 mock test where you will be getting the exam-like experience while typing the answers live on the platform which will be provided to you by Testbook. We'll provide you with one-on-one mentorship where you can connect with me and many other faculty members, or I would say the expert faculties of the country, who all will help you to clear your examination in the very first attempt. And because on the occasion of Republic Day and because of the immense demand we have witnessed during the Republic Day, we have extended the same offer till 31st of January in order to enjoy maximum discount on our offerings, on all the textbook offerings. You must use a code MADHAV in order to enjoy maximum discount and ensure your selection in the very first attempt itself. Do not forget to download the PDF from the given link. I will be catching you all in the next session to go, but you have to do a task, and the task for the day is, your homework is what? So your homework is, you need to give me the name of the CEO of Priority Sector Lenders Association of India. So give me the name of the CEO of this organization, which is a non-profit organization, and do write down his name in the comment section, and I will be checking your comments, replying whether it is correct or not. Do give me the feedback in the comment section. If you have enjoyed this session, do give me the feedback, and if you have any suggestion related to our finance current affairs session, please feel free to give your suggestions in the comment section, and I'll try my level best to implement those suggestions in the upcoming sessions to go, so that this session should be the most fruitful session for your preparation. Thank you so much, guys. Good luck. God bless you all. See you soon. Bye-bye. Take care.